Welcome everyone to today's Explainer. I am your host, and today we are putting First Financial Corporation, ticker THFF, through an absolute masterclass of a stress test. You know, as an investment analyst, there is literally nothing I love more than looking at a company through the eyes of the absolute greats. So we're going to use the legendary frameworks of Warren Buffett, Peter Lynch, and Benjamin Graham to see exactly how this specific regional bank stacks up. And we won't stop there. We're also going to build out our own discounted cash flow and valuation models to give you the whole shebang, a truly complete stock analysis. Let's get into it.
Okay, here's our game plan. First, a quick company snapshot to ground ourselves in the facts. Then we run TFF through the Buffett, Lynch, and Graham lenses. After that, we strip it down to pure math with our quantitative models. And finally, we'll synthesize everything into one clear recommendation.
All right, Section 1, the company snapshot. Let's get a baseline of exactly what we are dealing with here.
At the time of this analysis, First Financial is trading right around $81.83 a share. Keep that number locked in your head, okay? That 81.83 is going to be our objective anchor for literally all of the mathematical valuation models we run later on.
Now, it's absolutely crucial to understand that this is not some unproven fly-by-night startup. First Financial out of Terre Haute, Indiana was founded in 1834. I mean, to put that into perspective, Andrew Jackson was the U.S. president. They are the fifth oldest national bank in the country. Today, they're sitting on over $6.17 billion in total assets across 79 branches in 5 states. And they're still actively growing. They just bought out Cedarstone Financial in early 2026, which dumped hundreds of millions in loans and deposits right into their portfolio. And you can see the execution right here. The momentum is just undeniable. Net income jumped from $19.8 million in Q1 up to $22.7 million in Q2 of 2026. That was driven by record net interest income, which hit $61.2 million for the quarter, alongside a really healthy 4.33% net interest margin. Okay, moving on to Section 2, the Warren Buffett lens. Let's put on our first guru hat and see if this bank has what the Oracle of Omaha looks for.
So, for a regional bank, building a true economic moat is notoriously tough, right? Especially with the mega banks dominating everything. But being the fifth oldest national bank gives THFF nearly 2 centuries of deeply entrenched community trust. That localized, relationship-based stickiness, that's a classic regional bank moat. It's our first big clue that this company operates like a financial fortress.
Looking at Buffett's checklist, it's basically a clean sweep. First up, return on equity is sitting at a really robust 13.71%, easily clearing his hurdle. Second, their debt-to-equity ratio is a highly conservative 0.32, so they definitely aren't over-leveraged. And third, management quality, it looks incredibly stable. The board just locked in their CFO, Chief Credit Officer, and Chief Lending Officer with retention contracts through 2028. Plus, insiders own a solid 5% of the stock, which tightly aligns their interests with ours. But what about the price? To figure out intrinsic value for Buffett, we look at owner earnings. TFF generates roughly $8.14 per share in cash flow. If we project that out, the intrinsic value lands somewhere in the mid-80s. But, and this is a big but, Buffett is famous for demanding a strictly enforced margin of safety. Because of that, our models suggest he'd probably sit on his hands and wait for a dip closer to $72 before aggressively backing up the truck.
All right, Section 3, the Peter Lynch lens. Let's pivot and see how Peter Lynch would approach this. He loves to categorize a company first, just to see if the qualitative story actually matches the math. Based on his famous 6 categories, Lynch would undoubtedly stamp THFF as a stalwart. It is for sure not a fast grower, but it's an incredibly steady ship. It pays a super reliable dividend, currently yielding around 2.7%, with a highly sustainable payout ratio of just over 31%. This is a stock you rely on for steady, sleep-at-night compounding, not overnight riches.
But here's where things get a little tricky. How does THFF fare against Lynch's all-time favorite metric, the PEG ratio? So THFF has a modest PE of 11.46, but analysts only project about 2.5% earnings growth over the next year. When you divide 11.46 by 2.5, you get a PEG ratio of 4.58. Now, for Peter Lynch, anything over 1.0 starts feeling expensive. So a 4.58 PEG? Yeah, that's going to be way too high for his taste. On top of that, Lynch loves under-the-radar stocks, the ones Wall Street hasn't found yet. Well, with a massive 72.74% institutional ownership and 0 recent insider buying over the last 3 months, Wall Street is already well aware of First Financial.
Between the high PEG ratio and the heavy institutional presence, Peter Lynch would almost certainly stamp this one as a hold. Let's move to Section 4, the Benjamin Graham lens. The godfather of value investing and Buffett's mentor. Would Graham view THFF as a bargain right now? Let's find out.
So, we start by running THFF through Graham's super strict defensive investor checklist. Adequate size? Yep, market cap is hovering near $1 billion, so it's large enough to weather economic storms. Earnings stability? Yes, we already saw their growing quarterly net income. Uninterrupted dividend record? Absolutely, supported by that highly sustainable 31.37% payout ratio. It passes the initial defensive screens with flying colors. Now for the fun part, the math. Graham's famous intrinsic value formula uses a multiplier of 22.5 times trailing EPS times book value per share. When we plug in THFF's $7.14 of EPS and its $56.83 of book value, the math spits out a fair intrinsic value of $95.55, meaning at the current price of $81.83, we are looking at a highly attractive 14% margin of safety. Graham would be very, very interested here.
Okay, Section 5, DCF and quantitative models. Let's step away from the legendary gurus for just a minute and look at the raw, unadulterated math using a discounted cash flow model and some comparable multiples.
Running a base case DCF based on their free cash flow projections is pretty eye-opening. Assuming a standard 10% discount rate for regional banking risks and a 2% terminal growth rate to mirror long-term GDP growth, our model projects a fair value of $88.50. That sits comfortably above today's trading price. Purely based on its cash generation capabilities, this stock looks fundamentally undervalued.
And when you look at relative value, the discount is even more obvious. THFF is trading at a PE of just 11.46. Compare that to the broader market average PE of almost 40, or even the finance sector average of roughly 29, and First Financial is significantly cheaper than its peers. It also trades at a price-to-book of just 1.44, which is well below the threshold of 3 that typically flags a reasonable value. It's a bargain.
Finally, Section 6, Synthesis and Final Recommendation. We have run the gauntlet. We've looked at history, qualitative frameworks, and strict math. Now, it's time to bring it all together.
Here is our master scorecard, and it paints a very compelling picture. Graham's formula, the DCF model, and the comps all point to THFF being undervalued right now, flashing clear buy signals. Buffett loves the quality, but he'd demand a bigger margin of safety, holding out for a price near $72. And Peter Lynch? He'd just hold, totally deterred by the slow growth and the fact that institutions are already owned so much of it. Blending all these insights shows us exactly what THFF is. Listen, it's not a rocket ship, it's a fortress. Its exceptional profitability, we're talking a 23% net margin, and its nearly 200-year history make it a fantastic defensive play. But, as Lynch's metrics warned us, the slow 2.5% growth rate and massive institutional ownership are almost certainly going to cap any explosive upside. So based on the math, we rate TSFF a solid buy for value and dividend investors who just want stability. But I'll leave you with this final thought for your own portfolio. Do you anchor your investments with this steady stalwart today at 81.83? Or do you wait patiently for the broader market to stumble, hoping it serves up a Warren Buffett-sized discount? Let that sink in.